All right. Hi, everyone. Welcome. Thanks for joining today's webinar. My name is Teresa Donahue, Brand Engagement Marketing Manager at Volusion. Here at Volusion, we want to ensure our merchants receive an all-in-one e-commerce experience so that you have all the tools and support you need to successfully grow your business. We're able to do that by partnering with experts like 4Point Payments, a powerful payment solution catering to high-risk industries. Before we get started with our webinar today, just have a couple housekeeping items to go through. If you have any questions throughout the webinar, please submit them in the chat section below. We will be answering questions live at the end of the webinar. However, if we can't get to some questions because of time today, we'll follow up with you directly and also send out the questions and answers in an email tomorrow. We'll also send you a link to watch the recording of this webinar and a follow-up email that will be sent out. To learn more about how 4Point Payments and how they can help you in your business, please reference the handout attached in the webinar under resources. We will also include this information in the follow-up email. We're excited to have Roman and Nick here today with us from 4Point Payments, who are going to introduce you to their powerful payment solution. Let's go ahead and get started. I'll turn it over to you, Roman and Nick.
Thank you, Teresa. Welcome, everyone. Appreciate you joining us today. 4Point Payments, just a quick little bit about the company. We've been in business for over 15 years. We've got 3 offices in the US, and we're kind of the preferred referral partner for the larger risk-averse processors in the industry. You know, when they can't get a deal through their underwriting, they will kick it to us. And you know, more often than not, it isn't exactly what we would consider high risk. We'll touch a little bit more on that in the next slides, but yeah, essentially, the first we want to talk about is what exactly is true high risk. So there's several different types of risk that could mean. One is chargeback exposure, probably the one that most people are familiar with, and that's you know, is your business model a industry that's prone to chargebacks? You know, is it any type of future delivery where the business itself, from the time they take payment, let's say you know, a great example I like to use is the Fire Festival. You know, they took payment for a lot of these tickets to this concert/festival in advance. By the time the date was there, the whole thing fell apart, and the business itself didn't have any money in the bank to refund the transactions. So when that happens, the processor that underwrites you, they're on the hook for all of the incoming chargebacks. Another type of true high risk is reputational risk. That's when a larger risk-averse bank just doesn't want that particular business type in their portfolio. Adult is probably the best example of that. Most banks actually just don't want to have to deal with that. You know, it doesn't align with their values, so they pass on that from the get-go. They won't even take your application. There's a few other ones, such as in the reputational risk, such as you know, high interest lending. Typically anything above the interest rate of a credit card is considered predatory, but they are perfectly legal and legitimate businesses. So you know, there is a need for that very few banks want to cater to, because they typically tend to be short-term loans and so on and so forth. The third one that's probably the most popular is CRBs, cannabis-related businesses. And I'm not talking about the actual marijuana dispensaries themselves. I'm talking about a product called CBD. It comes from the hemp plant, which is the non-psychoactive cousin of marijuana. It doesn't have psychoactive properties, but it does have healing properties. And just because it looks and smells like its cousin marijuana, it really freaks out a lot of banks. It's hard to manage compliance. So almost all the banks just say, you know what, we're just going to say no to that, and they'll send it to a specialty processor like us, where we know how to actually monitor compliance, make sure that merchants are on that program, are doing what they should to maintain compliance, getting their products tested, posting the COAs on the website, and basically just following the rules. And the another one is the industry or category. So in processing, you have what's called an MCC, merchant category code. It's almost identical to a SIC code, standard industry classification. And some industry codes are just straight up, this business is going to be high risk. Nutraceuticals, weight loss, you know, because there's an expectation, drink this milkshake, you're going to lose 30 pounds. In the fine print, it probably says eat less fast food and exercise more. A lot of people don't do that. And then when they don't lose 30 pounds, then they, you know, have got buyer's remorse, and then they challenge the transaction. There's just always, you know, problems with those business types. So those will automatically get stamped high risk. And then there's other types of billing models that are always going to get the high risk or / higher risk. And that would be free trials. The industry term for that is negative option. Essentially, you know, you're going to get a free shipment of these, you know, skincare products. All you have to do is pay $3 for shipping. The product is free. What they don't really tell you in the fine print, or what they don't say on the commercials, is that you automatically enroll in the monthly club, where they then charge you $200 per bottle. A lot of people don't really know that that's how that works. So that results in a lot of disputed charges, and that falls under the true high risk category. So what happens when you're kind of labeled high risk? You know, you put an application in, and the underwriters either say we can't approve this, or you're straight up declined. That's where we see most of the customers that come across our desk. We don't really like to call it high risk. We call it harder to place. There's that one thing on the application that the initial underwriter wasn't quite comfortable with. You know, maybe you just went through a divorce and your credit score's kind of in the tank, and it wasn't quite good enough for that one bank. But, you know, if you explain that, then we say, all right, well, yeah, that, you know, sorry to hear that. You know plenty of people who have been there, and that makes sense. We're going to look right past that. We're not going to, you know, assess any additional pricing. It's just, you know, we understand. We're able to look at each account more individually and just see it for what it is, as a viable business. There's also other things that through our RegTech compliance, and RegTech is regulatory technical, we have technology that can make a hard to manage business type, such as CBD. We've got some tools to make sure that they stay compliant without the merchant ever really having to do anything. CBD is a great example of that, but I've already talked about that a little bit. So let's talk about kratom. Kratom is a plant that it's not quite regulated yet, but it's got some healing properties. Some tests are beginning to show, but with vertical like this, it's up to the state on how they want to kind of regulate it. A great example is Florida. Kratom is legal, but in Sarasota County, it is not. So an example of how our RegTech compliance would work is we have geofencing, which is where we can make sure that these websites are only available to geographic locations that allows these types of sales. There are some sneaky ways around that. If you've got a virtual private network or VPN, you can make your computer appear to be somewhere else where it's not. So our RegTech compliance software also has a fail-safe where we won't allow those merchants to complete a sale if it's shipping to a billing address or shipping address zip code in one of the prohibited areas. So we set those parameters on our end. So even if the merchant or their customers try to purchase these items in prohibited areas, our software ensures that it won't allow that. Because that's proven software, the banks will allow us to run transactions for these harder to place business types when most of the other banks and ISOs are prohibited, just because we've set up a system that shows that we understand the compliance in the space, and we have tools that will ensure that compliance is maintained. Next slide, please.
Yeah, I just want to talk about some of our sort of most common high-risk merchants. Nick just went over a few of them, but specifically with Volusion web store owners, I know firearms is relatively common. This is an example of a highly regulated industry, so there's less work for us to do because of the federal firearms license, and because of that, we're able to approve those merchants relatively quickly with sort of standard rates as opposed to a higher risk rate. And that's because of that FFL. Another example is furniture. That doesn't sound like a high risk merchant, but because that's usually ordered ahead of time and it might take 2 to 3 months for delivery, that transaction is sitting there as a risk to the bigger banks, and they're not interested in having that on their books. And that's when we come in. We have lots of interest in processing for future delivery like that. And then Nick talked about adult novelty. It's more of a reputational situation. It's, you know, it's an adult business, and just bigger banks don't want that on their books for just what it says, reputation reasons. Okay, and then getting started with 4-point payment. So if Stripe, First Data, one of the bigger processors, says no to your business, that's where me or one of the other sales reps here would come in. We get to know your business right out of the gate. So we're not just throwing your application up against the wall and hoping that it gets approved. We talk to you, we review all the information about your business, and then we submit it so that it goes into underwriting cleanly. People think that underwriting for high risk can take, you know, weeks, months. Not if you do it correctly, and that's how we submit our applications. It can take as little as 1 business day. Usually there is, you know, 1 response from underwriting, and then we respond to that, and that's when the approval comes through. We usually set up the payment gateway the same day that it is approved, and that's why I say here, all of this can happen in 2 business days. Generally, it takes 3 or 4, but it is not the bad reputation of very many weeks to get approved that some high-risk merchants think is the case.
All right, thanks so much, guys, for that overview. We'll now go into our Q&A, and it looks like we do have some questions here already. The first one being, does high-risk merchant mean higher rates?
No, not always. That's a great question. Everyone, most people think that, because there are shops out there that will just use the fact that, oh, you were declined. Well, you know, sorry, you're high risk. It means higher rates. In some cases, that is true, such as CBD always has a bit of a higher bin fee. Bin fee is a fee directly from the sponsor bank. You know, it's not like we are saying we need to make more money just because we can. You know, the bank themselves, even in the case where we've got RegTech compliance, they do still have to have, you know, committees and everything sort of go through the portfolio, do audits, spend time on it. They have to hire, you know, more time with their general counsel and outside counsel to just, you know, sort of document the fact that they're entering one of these spaces and that they are, you know, putting in the effort and time to make sure that they know the compliance and are, you know, ensuring that it's everything continues to maintain compliance. Most of the time, your pricing from, you know, if, for example, for Volusion, if you know, they put you through their primary solution and then it gets declined and it comes over to us, we're just gonna, you know, try to match that pricing, because that saves that time for that conversation. We don't have to go through the rates and fees again and everything. And you know, again, it's probably just that 1 or 2 little things that you know, wasn't quite you know, a square peg in a square hole. For the primary bank, you know, we can move past that quickly and push it to approval. So I'm not going to say that never, but most of the time we are able to, you know, keep the same pricing. And also, you know, I imagine you'll probably do some research on Fort Point payments, as you should. You'll see that we're partnered with the largest processors, the best shopping carts out there, like Volusion. You know, they go through a pretty tremendous vetting process to make sure that, you know, we're not one of those shops that's increasing pricing solely because we can, because we know that, you know, you're trying to focus on running your business and you don't really have time to start from square one shopping around. You know, if they recommend us and we're keeping the price the same, we've earned our spot in their lineup. You know, you don't really have to worry about that, at least with us.
Awesome, that's great. Thank you for sharing that. We have two other questions, but I just wanted to remind everyone that we have that handout under resources here in the webinar. So be sure to download that and save that. We'll also send it out in the email tomorrow. And also I just sent in the chat section of the webinar here the link to more information on Fort Point payments and the application itself. So be sure to check that out. All right, next question. Is there a monthly processing minimum or maximum?
There can be maximums set based on risk. You know, let's use an example that we had talked about before, concert tickets. You know, if there's, we have to, in the underwriting process for something like that, you know, we take a look at the business financials to make sure you actually have enough money in the bank to put on, you know, a festival or concert. And if there's not, or if it's falling short in any manner, we might say, well, let's put, you know, a cap at, you know, however many millions a month, just to kind of get it going and off the ground. But we understand the needs of most businesses, and we're able to provide enough volume for every scenario. When there's not, when the merchant's asking for far more volume than what, you know, we would assess that they'd need, usually it ends up being a case of, you know, business owner having big dreams, you know, like I'm gonna, you know, start this business and sales are gonna go through the roof, and sometimes we just have to talk to them to sort of get their expectations a little closer to earth. You know, we hope that you get those volumes, but you know, let's be a little more conservative. It's far easier to put a realistic number on the application, and then even if we're a week or two into you know, the approval and everything's up and running, if you're tracking to go above that maximum, awesome. That is a great problem to have. We can definitely you know, accommodate. We can re-underwrite it as we're going along. But it's, you know, we'll generally, our reps will tell you, you know, what numbers we should start with and how we can move through that. But, you know, I don't think anyone would really need to worry about a volume cap really affecting their business. So there are some maximums sometimes, but, you know, I don't know, 49 out of 50 times, it's not even going to be an issue that we'd have to worry about.
And minimums are rare. That really is for types of accounts that take a ton of work, like a CBD merchant, where so much compliance goes into it. There does need to be some amount of sales volume to justify all the work that goes into it.
Okay, cool. Thanks for answering that, guys. Another question here is, are there any setup fees?
No.
No.
Awesome.
I mean, in a retail environment, sure, there's equipment, but not with you know, Volusion partners. I mean, the first fees you're going to see are the you know, whatever monthly fee there is for the gateway that you choose. We have reseller licenses for all of the major gateways. Authorized.net is kind of the most popular one, just because most web developers out there use it. But NMI, USA ePay, Paytrace, you know, I mean, we probably have 15 gateways that we can set you up with. If you have one that you like working with, or if you have an existing one that has tokens in it and you just want to plug that into our merchant account, that's even better. You know, if you tell us I prefer working with NMI, great, that saves us the conversation. We'll just use the NMI gateway.
If you already have a gateway plugged into your Volusion store, generally you can keep that exact same gateway.
Awesome, thank you. And we did have one more question come in. Where can we see the rates to compare to current rates?
So the rates, they do differ based on industry types. Also, volume. It's sort of a underwriting formula. I wish that we could just say this is the rate for everybody. And simplify it and everything, but it's the underwriting formula. It's not so much risk versus reward, because high risk isn't about having the guts to roll the dice on a iffy merchant. It's just understanding the compliance of that vertical, knowing how much time it's going to take for us and the bank to monitor the account to make sure that everything's going as it should. But I can tell you that we are among the most competitive rates in the harder to place / high risk industry. Most of the time, I would say probably 85% of the time, we're able to just match whatever rates are on the declined application, or if you're moving your store from one shopping cart / processor to another, we'll just match what's on there. We're always happy to do a cost comparison to see if you're overpaying. We love to provide savings. It's very rare that there would be a scenario where we would say, actually, it's going to be 5 basis points higher because of this. It's just, those just aren't conversations that we have.
We need the basic amount of information about a merchant or a business to provide like a quote.
Okay, good to know. We'll take one more question here. And any questions that we don't get to today, we'll get back to you directly, and also include all the questions and the answers to these questions in an email tomorrow. So last question here is there a minimum term limit? If so, is there an early termination fee that gets assessed?
So we've got, in order to kind of accommodate everyone, we have over 50 domestic and international processing partners. I probably shouldn't have mentioned international, because less than 1% of the merchants we have go international, and that 1% is pretty much Puerto Rico, US Virgin Islands, and Canada, just because that's where the businesses are based. It's different. High risk can be a lot like chasing a moving target. CBD is a great example of that, because a bank can come up with a compliant program and they can underwrite deals, and still be compliant. But very often banks will just take their, eye off the ball. And then one merchant, they stop getting their products tested. And with the way that compliance is with CBD is you have to have less than 0.3% THC concentration in the product. And if they're selling anything above that, even though it's hemp derived product, it is considered by the regulators marijuana. They call it a hot batch. So if the bank's not continuing to make sure that the merchant is uploading COA's certificate of analysis, basically lab tests, and if anyone in their compliance department sees that there's merchants selling products that the COAs aren't up to code, then that bank program is out of compliance. They're essentially non-licensed drug dealing, and that will crash a program at a bank the next day. So, everything can be going well, and then just somebody's not doing their job right, and then all of a sudden the bank gets spooked and they dump the entire portfolio. The whole program gets purged, within a day. So we've got 9 domestic banks that are currently boarding CBD. We've probably had 10 domestic banks that were, but are no longer supporting it because of, similar reasons. So we're constantly developing new relationships with new banks, just so we have that option, because if something about your business doesn't quite, give the underwriter the underwriting warm and fuzzies, you know, they could drop you. And with our program, we have banks in the background that we can swap out, you know, overnight to keep your business up and running, so you don't have to worry about you know, any type of service interruptions with your processing, so on and so forth.
Yeah, and generally we're not charging an early termination fee. You're agreeing to a term, but if it does not work out, we are not charging a termination fee.
Yeah, there technically has to be a term to the contract. Our typical agreement is 3 years, but when the early termination fee is 0, it's essentially free to cancel it. So, you know, some of our sales reps might say the words no contract because that's a little more salesy, a little more catchy, but there is a contract. It's just free to cancel. If there are some scenarios where, let's say we have to put in some of our time, some of our development resources, you know, if we're, you know, doing anything that requires more than just, you know, the initial sales and services set it up, we might put a early termination fee on the account just to kind of stop them from leaving us overnight, leaving us high and dry. But, you know, if there's ever an early termination fee, it's on there just so that we can have a conversation before we waive it. If that makes sense.
Okay, awesome. Thank you guys for answering those questions. All right, that's all we have for today. Just as a reminder, be sure to check out the link that I have pasted in the chat here. We will be sending out the recording of this webinar, all information and resources that we've included in today's webinar, and also all of these questions and answers that we got to today, as well as those questions that we didn't get to. We'll send those out in the email tomorrow. Thank you all so much for attending, and thank you, Roman and Nick, for being here with us today. We really appreciate your partnership with us and everything you do for our merchants. All right, thank you all. Have a great day.
Thanks, everyone.